Well, let's turn to the commodity markets now, checking in on where silver stands. Spot silver, $36.65. Spot gold, $1,535 is where we stand right now with each of those commodities. Just dropping a little bit today, but really the big story has to be in the oil markets, because remember we've been covering the situation at OPEC, where talks appear to have pretty much collapsed really without any kind of resolution on what their quotas should be. And that has caused concern that we could see a real squeeze in the oil markets as we get further into the year. And that sent oil prices higher in anticipation of that kind of move. Over $100 a barrel again for NYMEX light sweet crude, $100.36. In fact, that's a gain of 0.6%. Let's see how that plays out over the past 3 months or so. Gains coming through today. Remember, we had a couple of big sell-offs in the past weeks. Over the past 3 months, factoring in today's gains, sending us back over $100 a barrel. That still represents a decline of 2.8%.
Thank you very much indeed for that, Becky. Well, let's get on to Erkut Ozer. He's the CEO of Global Trading Enterprises. Let's pick up on some of the things that Becky was pointing out for us here. Expectations on price development from here on in now in a lot of these commodities. Where do you think we are in terms of the market's view of the upside?
Generally, we're looking at the ags at the moment as the main movers in the next 3 to 6 months. Generally because there's a lot of weather factors and their plantings actually going on at this present time. We've got a supply and demand report coming out today by the USDA, which will show us how that planting progress is going. The worry is that with stocks so tight in the world alone, that we're going to have really tight prices. Any weather issues we have, that's going to push the price right up. We're going to hit levels that we haven't hit before. And that's the concern that a lot of people are worried about, including the United Nations, including the G20 talking about having a task force about how to manage this volatility. So there's a lot of concerns. Generally, corn is the one to watch at the moment.
So your sense is that the weather is going to keep these soft commodity prices well bid?
Yes, definitely.
At this stage. Pedro.
Hi there.
Hi there.
How do you argue the people who say commodities are not an asset class because you cannot effectively value them? I mean, what valuation measures do you use in order to make an investment in commodities and in order to derive a price target that you think is reasonable?
What happens with the agricultural market specifically, it's driven by demand. The price is set by the markets. So we kind of see if there's demand from exports, then that kind of, the market stabilizes the price itself. It finds a price which is fair value. Once the price becomes too high, then obviously demand goes down and then we get fair value again. So I think the market kind of derives its own price at the moment with the ags especially.
But where do you get conviction to invest from that?
We look at forward, we look at patterns, we look at what's happened in the past, we also look at what's coming up in the weather, geopolitical factors. In some of the developing countries, like in South America, they're investing a lot into agricultural products. So we see there's more value in there. But we have to be quite careful in how we invest as well, because if there is more supply into the markets, then that's going to affect the overall price as well.
So pick of these: corn, wheat, soybean.
At the moment, probably corn.
Excellent. Good to see you this morning. Thanks very much for coming in. Erkut Ozer, CEO of Global Trading Enterprises.